Hey guys, welcome to the new episode of Retrospect. So the other day I was watching Ran Nuna from Crypto Banter, and he talked about 4 crypto narratives that are going to be huge. I just want to go through those 4, from the ones that I think are less probable to the ones that I think are the most exciting. And the first one he talked about was the rise of crypto treasuries. And as most of you will know, someone called Michael Saylor from what was called MicroStrategy at that point, in 2020 decided to turn idle cash into crypto. And this marked a significant shift in corporate treasury strategies. The approval of Bitcoin and Ether ETFs in 2024 fueled institutional interest in digital assets, leading other companies to adopt similar strategies. So instead of parking his $500 million in cash at that time in bonds or stock buybacks, he decided to go all in on Bitcoin because he believed it was an apex asset which was scarce, decentralized, and structurally immune to inflation. Now, there is speculation that because Strategy's average price of Bitcoin that they bought in on was about $74,000, we're only $10,000 away from that price right now. There is speculation that he may be ready to get rid of a large portion of that. I think it's just this negativity that's seeping in due to the so-called major crash and bear market that we're in. Other small companies used it as a strategy just to get their stock price higher by copying Michael Saylor's strategy. It's offered a lot of small companies a immediate rise in stock price and then later falling. So not all companies that have adopted the strategy have seen success in it, and this strategy has spread through to altcoins as well, sparking interest in diversifying corporate crypto treasuries to these altcoins. And I think for now it's Michael Saylor's game and everyone else is trying to play it. So this is one of those narratives that I'm least excited about. The next narrative that he talked about was privacy coins. Now, as you may or may not know, privacy-centric cryptocurrencies in the past month have emerged as the best performing sector in the market and still holds true today, even as the broader market extends its 2-month slump. They've surged 276% year to date, making them the strongest and one of only 2 sectors showing positive returns this year. The other one being exchange tokens, but they've only gone up 10.8%. And it's pretty obvious as to what's driving the privacy coin rally this year. The rally is closely tied to a sharp rise in global surveillance and capital controls. And as regulators worldwide are tightening oversight of digital assets, the demand for privacy coins is increasing. And there's no doubt in my mind that those regulations are going to tighten further and further, and these privacy coins are going to become highly sought after and scarce. As institutional participation in crypto continues to increase, many retail traders and crypto native users are seeking projects that restore a sense of autonomy and privacy more than ever. The next one is the AI and crypto thesis, and something called the X402 protocol. And in my opinion, the convergence of AI and crypto is inevitable. And the X402 protocol, which is a payment system designed for autonomous AI agents, its ecosystem tokens have just surged 200% and 1,000% in days, with the flagship token Ping rocketing over 1,000% in 24 hours, attracting 31,000 new buyers and generating $3.5 billion in daily trading volume. Now, X402 is a payment protocol which was first conceptualized by Coinbase, and it was specifically designed for AI agents to autonomously transact. The name derives from the HTTP status code 402, payment required, which is an official code defined in 1997, but it was never widely implemented. The code has sat dormant for nearly 30 years, and it's awaiting a use case, and this is it. So the traditional payment systems like credit cards, bank transfers, and even most retail crypto apps are built for human decision making. AI agents operating at machine speed cannot pause to ask for approval for every microtransaction. They require a native autonomous payment rail, and X402 provides this. The protocol enables an automatic cryptographic payment. It is blockchain agnostic, but it is optimized for base Coinbase's layer 2 network to facilitate fast, cheap micropayments. Now, Ping is not alone. There are others like Zara that surged 771% and Clanker that rose 140%. And I believe there's going to be an explosion of tokens following this new protocol. Last but not least is the rise of the prediction markets. And this is a new wave of platforms that lets traders bet on real-world events. And those events could be anything: sporting events, policy decisions, to pop culture. And what began as speculation is now challenging how finance measures truth and probability. Have you ever heard of that term, put your money where your mouth is? This is exactly that. Now, there are two platforms that lead this shift, and it's Polymarket, which is a crypto-native marketplace built on stable coins and smart contracts, and Kalshi, which is a US regulated exchange supervised by the CFTC. Both turn opinions into money-backed forecasts, but both have very different approaches. And the reason behind the accuracy of these markets is that wisdom comes in the crowds. When many independent individuals each contribute a small piece of information, the aggregated result is often more accurate than any single expert's opinion. In markets, that aggregation happens through prices, and every trade reflects new information or conviction. So the market price becomes a real-time consensus probability. And obviously, the accuracy of these markets depends on how much liquidity, volume, and proximity to the event. Predictions are made through event contracts, which give the possibility to users to buy shares of a yes or a no on the event. The price of the shares directly reflects the implied probability of the event happening. For example, if the market thinks there's an 18% chance of an event happening, users can buy yes shares at 18 cents, and if the event happens, yes holders will be paid out $1 per share, while the no shares will become worthless. The movement has been split into two camps, one that is on-chain and one that is on Wall Street. On one side, they are building open markets where anyone with a wallet can bet on the future. On the other, finance professionals are building compliant exchanges where event trading complies with US regulation. And that's why I think markets like Polymarket are going to be huge in the future, because it is the decentralized truth market. And look at that growth of the new markets on Polymarket per month. We're seeing over 35,000 new markets a month on Polymarket in October 2025. It was just over 10,000 in July of 2025. And Polymarket has become the world's largest prediction market with over $21 billion in cumulative volume. And personally, I think that is very, very early. When traders buy or sell shares, they interact with an on-chain liquidity pool on the Polygon network, which adjusts prices dynamically and ensures sufficient collateral remains to pay winning shares $1 upon resolution. And traders interact wallet to wallet, relying on software rather than institutions to enforce fairness. The prices on Polymarket move continuously as information changes, and it forms a live, very accurate barometer of public sentiment. And in my opinion, the prediction market industry is rapidly gaining relevance. So guys, what do you think is the strongest of these four narratives? Maybe there are some new narratives which you've picked up. Please comment on the video, hit a like, and subscribe to the channel for future videos. And please have a great rest of your weekend. Till the next one. Bye.